Hello and welcome to Thoughts on Investing. Now, for the last couple of years, all the talk around AI hardware has been about one thing, right? GPUs. But while we were all watching the chip makers, a quieter and frankly, a much crazier revolution has been taking place. Memory and storage stocks have gone completely parabolic, and today we're going to break down exactly why. Let's dive into what's being called the AI memory supercycle. But before we get into the wild numbers, a quick but super important reminder. This is all for educational purposes. It is not financial advice. The markets can be a crazy place, so please, always do your own research before making any investment decisions, all right? Let's get to it.
You know, this quote right here, it really gets to the heart of everything we're talking about today. We've all been trained to think of AI as a problem of pure processing power, but it turns out that's only half the story. The real bottleneck, the hidden challenge, is storage. Think about it. Every single AI model, every chat query, every image you generate, it all creates and needs to access just staggering amounts of data. And all that data has to live somewhere.
And that brings us right to our first section. We're going to dig into how storage suddenly became the new rocket fuel for the entire AI industry, creating this market explosion that, honestly, almost nobody saw coming. The term you're going to hear over and over is memory supercycle. Now, what does that actually mean? Well, this is the most important part. It's not just a temporary price spike. A supercycle is a huge, long-term shift. It's when a massive new technology, like AI, creates so much demand that the world literally can't produce enough supply to keep up, and this can go on for years. And when that happens, the companies that make this stuff get incredible pricing power.
So who exactly has been riding this massive wave? Let's get to the good part and look at the key players who have seen some truly mind-bending returns from this whole phenomenon.
And we have to start with SanDisk. I mean, this company is basically the poster child for the entire storage boom. They specialize in what's called NAND flash. That's the magic stuff inside those incredibly fast solid-state drives, or SSDs, and the big cloud companies, the so-called hyperscalers, are buying these things up faster than anyone can make them. And the result of being in the right place at the right time? Well, just look at that number. Over 1,500%. No, that is not a typo. Since it spun off in early 2025, the stock has gone from around $36 a share to as high as $725. That's the definition of a parabolic move, and it's exactly why SanDisk is at the center of this story.
And this isn't just stock market hype. The fundamentals are absolutely screaming. The recent earnings per share didn't just beat estimates, they completely shattered them. Revenue is growing at a massive 61% year over year. And maybe the most interesting part, even after that insane run, its forward PE ratio is still only around 15. For Wall Street, a number like that suggests that the market thinks its profit growth is far from done.
Next up, we have Western Digital, SanDisk's former parent company. And they've had their own incredible run, gaining around 280 to 290% in 2025. Now, while SanDisk focuses on the super-fast memory for active processing, Western Digital is a king in the massive, high-capacity hard drives that you need for long-term data storage. It's a great way to think about it. AI needs a lightning-fast workbench, which is SanDisk, and a giant library, which is Western Digital. Now, let's talk about another absolute titan in this space, Micron Technology. These guys are a memory powerhouse. They make the critical dream and, more importantly, the high bandwidth memory, or HBM, that physically sits right next to the AI chips, feeding them data at incredible speeds. And no surprise here, their stock also went ballistic, jumping about 230 to 240% in 2025. So what's got everyone so excited about Micron? Well, take a look at their valuation. The current price-to-earnings ratio is around 37, which is, not cheap. But its forward PE, the one based on what analysts expect it to earn in the future, is down below 10. That huge gap is a big signal to investors that the stock could still be a bargain compared to the profits they're expected to rake in.
And this trend is really broad-based. It's not just a few companies. You have Seagate, another major player in hard drives, which climbed over 200%. And even a diversified behemoth like Samsung has seen its memory division turn into a massive profit engine, all thanks to this insatiable AI demand.
Okay, so we've seen the who, all these incredible winners, but what about the why? What are the actual forces that lit the fuse on this absolute explosion? Let's break down the drivers. It really just comes down to this simple but incredibly powerful chain reaction. First, AI is creating a literal tsunami of data. The scale is something we've just never seen. Second,
The world's ability to actually manufacture these advanced memory chips is very limited. You can't just build a new factory overnight. And third, you know what happens when demand goes to the moon and supply is stuck on the ground? The suppliers get to name their price. Of course, with moves like these, Wall Street is paying very close attention. So let's see what the experts are saying, because this gives us a really good look at both the opportunities and, of course, the risks that might be ahead. So the bull case, the optimistic view, is really strong. Analysts are saying this isn't just a fad, it's a structural, multi-year supercycle driven by AI's fundamental need for data. And maybe the biggest piece of evidence is that the cloud giants are signing huge, long-term contracts to lock in their memory supply. They are betting billions of dollars that this demand is here to stay. But on the other hand, there's a more cautious take, and it's pretty simple. When stocks go up this far, this fast, they can get exhausted. Many of these stocks are in what traders call overbought territory, which means a pullback, or at least a cooling-off period, is pretty likely. And the big, long-term question is always there. Will supply eventually ramp up and catch up with all this demand? Which brings us to the big question that every single investor is asking right now. Is this the beginning of a massive, multi-year trend, or are these stocks getting way ahead of themselves and are due for a serious correction? And here you can really see the two arguments side by side. The long-term bull case is all about the structural need for data from AI lasting for years. The short-term risk is simply that these stocks have had an incredible run and just might need to take a breather. The key really is being able to tell the difference between short-term noise and a change in the long-term story. So let's just quickly wrap up the key takeaways here. Number one, storage and memory are no longer a boring part of the tech world. They are absolutely central to the AI infrastructure story. Two, these parabolic stock gains are not just fluff, they reflect real demand, real shortages, and real pricing power. And finally, while the long-term outlook seems really bullish, you have to expect some volatility and pullbacks after a historic run like this. I'll leave you with one final thought to chew on. For so long, we've thought of computing power as the most critical resource for AI. But as AI's appetite for data just continues to grow, maybe infinitely, could it be that the physical space to store all that data becomes the single most valuable resource of all? Something to think about. If you enjoyed this breakdown, please don't forget to like this video and subscribe to the channel. Thanks for watching.